Hello, speaking Forex. This is Gregory. It's currently 3:25 a.m. Pacific Standard Time. It is July 19th, and I have a really good trade setup here. I'm not going to discuss it thoroughly because it's very late for me. I'm actually about to go to sleep, but when I wake up in the morning, um, I'm going to unpause the video and then I'm going to continue with the analysis. So currently, I am short the New Zealand dollar. I just got into the trade a few minutes ago. Currently, the price is at 80.42. As you can see, we have this regression trend line that's actually um, been this trend wall here has been trending down. And if we zoom in a little closer, as you can see, we're near the top of this particular trend wall. So I'm looking for a sell to the downside and perhaps to try to hit the middle of this trend wall here. So let's briefly talk about the alignments that we have. So currently we're converging with the half number at 80.50, which is also the 89% retracement of this leg right here. So we have three areas of confluence here with the line, the the half number, as well as the 89% retracement. So if this holds the way I anticipate it should, I expect to see a reversal here, and then I'm going to take it down to the median slope here, which should hopefully be hit by the end of the week. So we got about 2 days for that to happen. So I'm going to pause the video and then I'm going to follow up with more analysis when I wake up in the morning. Hi, speaking Forex. This is Gregory. It's currently 1 p.m. Pacific Standard Time, July 19th. And this is my analysis for the New Zealand dollar. It's an update, actually. Before I went to bed, I was actually I was short the New Zealand dollar around 80.45, I believe. So currently we're just about 15 pips away. So I'm in slight profit. Remember, I was. Let me actually remove this and a quick review. Okay. So remember my reasoning for entries because of the intersection of the trend wall and the 89% retracement area. And so looks like we definitely have respect there. So now I have two positions in it. And so my first, I'm going to cover my first position at 8,000, okay, which is about a 45 pip profit. And then once I cover my first position, the second position is going to be at break even. Currently I have my stop placed above here, so my risk is very minimal. So I'm only risking a little bit in this trade. Now, once the day is complete and I figure out the pivots for this particular currency pair, I'm going to place my stop above the pivot that's above this high. That should give me enough protection just in case something happens, because most likely this may not complete until over the weekend. So it's a swing trade. So just to add in a little protection, I'm going to place my stop above that particular high there. But most likely I should be able to at least exit my first position, so I should be pretty safe, at least right now. Then I adjust my stops depending on how the day closes tomorrow if I do not hit my target by then. So we're in right here. We're looking for our first target to get hit at 8,000 and our second target. Let's talk about that. So if we do retracements from bottom to top of the last up move, we have the 38% to 50% and then 61.8%. I want to focus on the 61%, and the reason why is because we have major support that's already been established there. Many times the market has tried to penetrate it with no success. So that's very important for us to be cognizant of. We also have the median of this um, of this trend wall here. So we got this median slope that intersects with the 61% and the support area. So that's another thing to be aware of. And so we have three areas of confluence. So I think this is a pretty good target for us. And if the market comes down this far, we can assume that there's going to be a lot of buying pressure coming into the market around this area. So I want to get out of the trade around here if the market comes down that far. Now, the market may actually only come down to 79.80 or something like that for the first time around, or it may even come down to 79. Looks like 79.60. Yeah, 79.60 for the 50% retracement for the first time around. So it may come down maybe this far, and it may come back up and retest the 8,000, and then come way down here to the 79.35. Not sure exactly how that's going to play out yet. So depending on what happens tomorrow will determine exactly how I ultimately play this. But I think I'm going to go for the 50% retracement. That's pretty standard, to target a 50% retracement and then reevaluate and see where we can go from there. So it's anywhere between 79.80 and 79.60. May look for a pivot area in between these 2 points. Use that as my target. And if I hit that today or tomorrow, then I'm actually fine with that, because that means I can go into the weekend without holding a position. But if I do not hit that, I'm actually confident that my position is going to be pretty safe, as long as I protect myself with pretty decent stops accordingly. So 38%, 50% should be the best area. A pivot area that's in between the two, or anything that coincides with that, would be optimal. And then maybe sometime in the near future, expected retests of this support at 79.35 if we can get it. So that's what I'm looking at with the Kiwi dollar. This is a 4-hour chart. This is a swing trade, so this could be anywhere from 1 day to 3 days.